50% yield curve inversion are going to lead to a massive long bond TLT rally and a painful recession. What a rally we had in stocks the last few days. It does feel like a face ripper rally. No doubt about that. We saw commodity prices coming down a lot. We know gold has come down a lot to $1,650 from an all-time high from 2000. Down about 20% already. We have data showing supply chain disruption is coming back lower. Does this mean deflation is coming? Would we see the capitulation of the long bond? We are seeing the VIX push down to 30 again. We know there will be a VIX surge higher sooner than later in this bear market. I believe when the VIX finally surges to the upside, long bond TLT will have a face-ripping rally no one in history has ever seen before. Because we know from 50% of the yield curve inversion, even Bloomberg has said there's a 100% chance of a recession coming. What does the Fed do when a recession comes? Yes, the Fed will pivot and drop the rate back to 0. Then TLT will be at 190. From 90s to 190, that's a home run opportunity. The question is, would you take the chance for this roller coaster ride? Or would you just wait for the bottom for now? Is this the start of a new cycle? That interest rate is only going up like the 1970s? Or is this a once-in-a-lifetime long bond buying opportunity? I will let you know what I am doing with long bond TLT right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity market. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button. If you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you're a sweet boy, go to patreon.com/magicalgoddesscheryl to support my work. If you want to be my good boy, apply to write your first book with me, author of best-selling books, Goddess Cheryl. My good boys always obey, and they always get rewarded handsomely. Have you been a good boy? You will get the encouragement you need on your author journey. Most interestingly, is 3-month yield has finally moving up quite rapidly. It went up as high as 3.97%, almost 4%. 2-year yield is hanging around 4.4%, as we have studied from the inverted yield curve. The warning sign is when the 3-month on top higher than the 2 years. Now we have the 3-month yield moving up faster than the rest of the yield on the curve. We saw as the rest of the yield curve is moving down and 3-month yield is moving up. Signals something is about to happen. We know 3-month yield is leading the interest rates, not the Fed. The Fed is just following the 3-month yield. We know the Fed will raise the Fed funds rate to 4% on November 2nd. When the Fed funds rate or the 3-month yield inverted above the 2-year yield, that's a great deflation signal. That big long bond TLT rally will start within a year. We don't really have that yet at the moment. How low will the TLT go before it bottoms? From the beginning of TLT, it was selling for 80 at the lowest price. But will that be the low? It could be. If TLT drops to 80, I would be a buyer for sure. Again, we only do paper trades in this channel. This is not financial advice. The last time TLT was traded around $80 per share. It has to go back to 2004, June 14th. At that time, 10-year bond yield was around 4.8%. Now we are at 4% flat. 30-year bond yield was at 5.4%. Now 30-year bond yield was at 4% too. If 2-year yield keeps climbing higher as the U.S. Treasury Department keeps on issuing new debt, we might be able to see all the yields rising together to 5%. That is the highest we are ever going to get from the Fed watch tool. At that time, TLT could reach 80. If nothing hasn't broke yet in the process, that's the ultimate question, if it could trigger something to break sooner. Because the Fed raising interest rates, it could take a long time to work the effect into the economy. In my opinion, this whole way down of the S&P 500 is dragged down by the long bond. When the stock market got dragged down, it often signaling a recession too. Because when people see their 401k is down 50%, they are less likely to spend more in the economy. We have data showing global supply chain pressure has come down 75% since November of 2021. This is a disinflation happened in the economy showing its sign. What's happening in this market is crazy. Oil prices falling like a depression is coming. Stocks bouncing like the next bull trap is forming. VIX trading like we are in a bull market already. Treasury yields up like inflation is 20%. Gold down like deflation is coming. We are far from the clear. Don't let this bear market rally fool you to buy stocks. We already triggered the kiss of death at the end of September on the monthly. It will trigger a long-term bear market in the S&P 500. Keep your cash in your pants. And don't take it out until you see the Fed pivot. Top economist David Rosenberg warns the bear market rally in the stocks won't last and says consumers are running short of cash. David Rosenberg has dismissed the latest U.S. stock market rally as a temporary reprieve for investors and warned American consumers are running short of cash. It's got all the hallmarks of a bear market rally. We've seen 6 of these already. The Rosenberg research founder told CNBC on Monday after the S&P 500 closed 2.7% higher and the Nasdaq gained 3.4%. Both indices were up another 1.9% on Tuesday at last check. Rosenberg noted that the S&P 500 is still down about 22% this year, despite 7 bear market rallies so far. He expects the latest bounce in stocks to be short-lived as well. There was nothing fundamental about yesterday's rally. He said in the morning note on Tuesday, the economic backdrop has not changed. With earnings season picking up in the coming days and weeks, our expectation remains that the S&P 500 earnings trends and guidance will disappoint, fueling the next leg lower for the stock market. The Rosenberg research chief has previously said the stock market tends to find a bottom 16 months after the Federal Reserve stops hiking interest rates. So he doesn't expect a recovery until late next year or 2024. During the Monday interview, Rosenberg dismissed Bank of America CEO Brian comments that many consumers save money during the world crisis and that their bank balances are yet to shrink significantly. That cushion is subsiding at a very quick rate, he said, about the boost to household finances provided by stimulus checks and other government aid. Rosenberg emphasized that inflation, which hit a 40-year high of 9.1% in June, continues to erode the purchasing power of dollars. He also pointed out that real U.S. retail sales shrunk by 2% on an annualized basis in the third quarter. Credit card balances have surged, and consumers have started cutting back on non-essential items in favor of food, medicine, and other necessities. Okay, now I'm going to show you my client Lee Vincent's book, The 3 Most Important Influencers You Need to Meet. I did write the foreword in this one, a great book. And my client Teddy Eazzy's book, Wicked Pussy Perfume. This is an erotic novel, another incredible book. And my book, Hocus Pocus Attitude, Unlocking the Magic to Live Your Dreams. This is me on the front here. Another amazing book. And my book, Magic Mindset, another outstanding book, Magic Mindset. So all of these books help with depression, anxiety, stress. We are living in uncertain times. I thank you for being a fan and supporting me. I hope that you like my video. And if you haven't, please like it today. And let me know what you think in the comment section below. Thank you for watching. Bye.